Okay, let's talk about Polkadot, because if you've been watching the crypto markets at all, you've seen the absolute bloodbath. The price has just been hammered. And the common narrative is that, its best days are over. But if you look under the hood, a completely different story starts to emerge. So which one is it? A dead chain or a project in the middle of a massive, deep reboot? Let's break it all down.
So first things first, we have to tackle the dominant narrative out there, that Polkadot is, for all intents and purposes, basically finished. And look, this isn't just random fear and uncertainty. It's a story that's built on some very real, and let's be honest, very painful market data.
And this number, this is really the heart of it all. A staggering 90% drop from its all-time high of around $55 way back in November of 2021. For many people, a drawdown like this isn't just a bear market cycle. It feels like a death sentence. It's the kind of chart that makes it incredibly easy to just write a project off completely.
Now, what's really fascinating here is how a persistent price drop can almost become a self-fulfilling prophecy. This quote just nails it. The story became that Polkadot had simply missed its chance. As other ecosystems like Solana and all the Ethereum Layer 2s were gaining all this momentum, Polkadot's flatlining price just felt like confirmation that the market had moved on.
And then this happened. There was an exploit on the Hyperbridge Gateway where an attacker minted a billion DOT and just dumped them. Now, let's be super clear here, the core Polkadot chain itself was not compromised. But in a nervous market, those details don't always matter, do they? This whole event just poured gasoline on an already burning fire, speeding up the downtrend and hammering home that dead chain narrative. So that's the story the market's telling us. A pretty bleak one. But as we all know, price is rarely the whole story. So let's shift gears now, look past the charts, and really dig into the protocol's actual health. And really, this is the most important question, isn't it? If we just pretend the price chart doesn't exist for a minute and we look at the fundamental activity, what's actually being built, does that dead chain narrative still hold up? Well, this is where the story starts to get a whole lot more interesting. I absolutely love this analogy because it reframes the issue perfectly. Polkadot isn't some consumer app. It's a layer zero. Think of it like core internet infrastructure, but for other blockchains. Its real value is in its utility and its security, not just short-term speculation. This really shows that for projects like this, price is almost always a lagging indicator, not a real-time reflection of its health or its future potential.
Okay, so let's get into the actual evidence, because while the market was completely fixated on the price, Polkadot's developers were just heads down, executing a complete and total overhaul of the network's technology and its economics. Let's start with this number, 98. What is that? Well, that's the number of active core developers who made commits to Polkadot's public code repositories in a recent 30-day period. And developer activity is probably the single most honest metric you can find for a protocol's long-term health.
And here's where that number fits into the bigger picture. A global ranking of number 6 for developer activity. That actually puts Polkadot ahead of major players like Sui and Cardano. Now, this is not the chart of a project that's in decline. This is the chart of a protocol with a deeply committed, super active developer base. And that is a very powerful leading indicator. So what have all these developers been building? First up is something called Agile Coretime. This is a complete reimagining of how projects get access to the network, and it's specifically designed to fix the single biggest criticism of the ecosystem, its incredibly high barrier to entry. The old way, the parachain auctions, it required teams to lock up huge amounts of DOT for 2 full years. It was a massive barrier to entry, no question. The new way, Agile Coretime, is more like cloud computing for blockchains. You can just buy block space on demand or in bulk whenever you need it. It's so much more flexible, so much more accessible, and it really opens the door for a whole new wave of builders to come in. All right, next up, the economics. Polkadot's governance recently passed a absolutely monumental change to its tokenomics. People have started calling it the Polkadot halving because the effect was just that dramatic. It fundamentally changes the long-term supply story for the DOT token. So the most important point is right here. The network went from printing about 120 million new DOT every single year to only 55 million. But even more important than that, it moved from this open-ended inflationary model to one with a hard supply cap of 2.1 billion DOT. This introduces long-term scarcity into the equation, a massive shift for anyone who's trying to evaluate this asset. When you see it visually, the change is just striking. We're talking a cut of over 50% in the new supply that's hitting the market each year.
This dramatically reduces the natural built-in sell pressure on the token, which frankly had been a major headwind for its price performance for years.
And finally, there's the issue of access. The launch of the 21 shares TDOT ETF on Nasdaq is one of those quiet but absolutely massive developments. For the very first time, big institutional buyers, we're talking pension funds, investment advisors, they can get DOT exposure right through their normal brokerage accounts. This just opens up a whole new firehouse of capital that can now flow into the ecosystem. So, with this whole reboot underway, where exactly does Polkadot fit into the broader crypto landscape? Well, the biggest battle it's fighting is the one for interoperability, and that means we have to look at its primary competitor, Cosmos.
A quick side-by-side comparison shows two really different approaches to the same problem. Polkadot offers what's called shared security, where every project inherits the strength of the main chain. Cosmos, on the other hand, offers sovereign security, where each chain is responsible for itself. And you can see the difference in adoption right now, with Cosmos having a significantly larger on-chain value, or TVL.
This really gets to the core philosophical difference between them. You can think of Polkadot as a modular monolith. You get incredible, uniform security right out of the box. Cosmos is more like pure modularity. You get ultimate freedom and sovereignty. It's a fundamental trade-off, and developers have to decide which of those models actually fits their project best. Which brings us right back to our central question. We have these two completely different stories playing out at the exact same time. One is a story of market collapse, and the other is a story of a deep, fundamental reboot from the ground up. So here's the summary of everything. The myth, or at least the market narrative, is all driven by that brutal price crash and the scary headlines. But the reality, when you actually look at the data, is a protocol with elite developer activity, a complete technology overhaul, and a brand new economic model that's actually built for scarcity. So the real question is, which of these two stories is going to win out in the end? And I'll just leave you with this one final thought. We all know that price usually tells you where a project has been. It's a reflection of past sentiment. But the fundamentals, things like developer activity, protocol upgrades, they often tell you where a project is going. So the ultimate question for Polkadot is, will its powerful new fundamentals eventually drag its price up with them? Well, that's for the market and for you to decide. Thanks for tuning in.